let's talk about this. The big crypto and Bitcoin miners, the way they're rebranding, the kind of the two positions here, just to kind of set it up for you all, is there's an idea that the miners should focus on mining and not diversify. However, there's this whole other side of the token that says diversify, rebrand, move into high-powered computing, that sort of thing. This article is coming from CoinDesk as well. It says some of the new business lines are more profitable than Bitcoin mining, but not all. Bitcoin miners are trying to survive an icy crypto winter by broadening the scope of their business, both in name and in practice. On January 4th, one of the biggest publicly traded Bitcoin mining firms announced it was swapping the blockchain out for its name, or of its name, for platforms. The rebranding to Riot Platforms was to underpin an increasingly diversified business. It is not the only firm making a name change. In the past year, miners have worked to diversify their revenue streams into other products and services using energy-intensive data centers. Some did so in response to brutal market conditions, while others took steps to prepare for a downturn when business was still going strong. The strategy is the opposite of what we've seen in the past bull markets, where publicly traded firms would add the word crypto or blockchain to their names and see their shares surge more than 100% in a day, even if the company had no viable crypto-related business plan. And I remember that happening for sure. Now, quote, there's a general desire by companies to distance themselves from the crypto bubble of the last couple years, end quote, said D.A. Davidson analyst Chris Brendler. Quote, it makes it easier when you're dealing with more traditional finance institutions, end quote. Exactly how much of this wave of corporate rebranding and promises of new business lines is just talk to pump stock valuations in a depressed market, and whether it will last is yet to be determined. It depends on how profitable it will be to diversify. As we see with the last bear market, many miners are pivoting their public narratives as a diversified business so they don't face solely the struggling mining valuation, said Ethan Vera, chief operating officer of mining service firm Luxor Technologies. Just like traditional commodities, Bitcoin mining is an extremely competitive and capital-intensive business, with miners competing for an asset that is limited in quantity. There are only about 2 million more Bitcoins that can be mined until the Bitcoin network reaches a cap of 21 million. Assuming the current Bitcoin price of $25,000 per token, the total value of Bitcoin to be mined works out to about $50 billion. That amount is super finite, said Lucas Pipes, an analyst at investment bank B. Riley Financial. With many miners adding constant computing power to mine the limited amount of Bitcoin, basing a whole business model on mining alone may not be viable. So companies are looking to repurpose some of their computing power for other industries and services. This includes selling high-performance computing to firms in industries like artificial intelligence and cybersecurity. Others are looking to capitalize on energy markets, either by owning their own assets or selling energy back to the grid. Quote, if you want to have a market cap of 50 billion, and what good CEO doesn't want to have a high market cap, you need to do something else as well, Pipe said. However, many strategies miners are implementing to diversify could do more harm than good. High-performance computing services take away from their core business, according to D.A. Davidson's Brendler. Brendler thinks miners are probably better off just focusing on mining Bitcoin instead of entering a new sector and taking on clients that need high-powered computing and compete against established tech firms such as Amazon and Microsoft. And what about miners trying to sell energy to the grid? That's just another sign of the difficult times, he said. One of the ways miners are diversifying their revenues is by leveraging their high energy consumption and close ties to the power grids. This is just what you've been talking about earlier, right? So I think we can kind of move that. That's one strategy. I think the second play that we need to kind of define here, because I think we've defined that one quite well already in today's episode, is the high performance computing play. Miners entering the high-performance computing market are essentially hitching the wagon on a mega trend that should last for many years, B. Riley's Pipe said. Bitcoin miners are uniquely positioned to compete in high-performance computing, as most of them already have data centers and access to low-cost power, said Luxor's Vera. Now, a side note here, I think like if you have a bunch of Bitcoin miners, though, it's not... You have to change the actual hardware that you're running to make this play. Now, they're going to use an example here, and that isn't Bitcoin mining, right? However, the high-performance computing market is very competitive, and miners lack the infrastructure and capabilities of already established data center operators. The computing industry is a business geared to face customers, Vera said, and many Bitcoin miners don't exactly have sales divisions. In early 2022, Canadian mining company Hut 8 Mining bought 5 data centers from TerraGo for about $22 million, which had grown to 14% of its revenue by the end of the third quarter. That's more than its mining hosting business was bringing in quarterly last year. Diversifying into the wider world of compute is essentially catching a rising tide, B. Riley's Pipe said. The industry may ebb and flow, and it might be riskier depending on the clientele, but overall it's a growing sector. ZIL estimates that gross margin for Hut 8's high-performance computing segment has remained about 50% through 2022, while its mining margin dropped to 34% in Q3. For comparison, operating margins for major computing firms such as Amazon Web Services and Microsoft are reportedly in the 25 to 40% range. I think that's really all we need to cover. I do want to clarify, first of all, Hut 8 was heavily leveraged into GPU mining. Not only that, they had custom GPUs from NVIDIA directly, which puts them in a very unique position when it comes to high-powered computing. The home miner with a GPU rig is not necessarily in the position to adopt this type of strategy. This is a strategy that is adopted by essentially high-powered computing servers that are going to be able to run these GPUs in a by 8 configuration, which means that you have to have essentially more PCI lanes, which means more CPUs, which means more memory. All these types of things go into the cost of this. And this is also something actually that we'll probably be talking about a lot more in the GPU mining space with things like proof of useful work from Flux, right? So it's a really interesting topic, but I think that unfortunately, the way this article was written, they're saying Bitcoin miner Hut 8, but if you understand the industry, you understand that very important distinction, right? Today's sponsor is BT Miners. BT Miners has been a longtime sponsor of the channel and a proven reliable source for ASIC miners. If you're looking to purchase ASICs hardware from Bitcoin to Dogecoin miners, they are available for purchase on bt-miners.com. BT Miners is a trusted source by both ASICminervalue.com and CryptoMiner.com. Follow the affiliate link in the description and tell them SOT sent you to support the channel.
Yeah. So to jump on that, none of the Bitcoin miners out there that are just Bitcoin, those are ASICs. And those ASICs are made to do one thing, to process SHA-256 transactions as fast as not thermodynamically possible on 5 nanometer, 7 nanometer architecture. So you're not repurposing that to do anything besides Bitcoin mine. And most of the facilities are structured in a way that they're designed for that, if it's WhatsMiner or any of the other form factors to fit on a shelf. So, and they're not in a necessarily what I would call a clean environment either. Even some of the nicer locations like that have relatively good filtration and airflow, they're still super dusty. So they're not really quality data centers. And anybody that has any experience in the data center world, it isn't necessarily about how powerful everything is. It's your security, because you're dealing with things that have to do with PII information, CUI information, which is very important. Who has access to those servers? They're usually locked up. There's Halon because you have financial and critical services running on them. So there's a decorum and a design that has to be met from a data center activity. So at best, most of those things with like Hut 8 typically would be something like just a render farm. So it's stuff that if you lose it, it doesn't matter. You just re-render, right? So it's just a job load that it's taking, and then it's outputting something. So to refactor a crypto mine to a data center, not even getting just for those reasons is typically not what you would do. So it's kind of being mischaracterized. On an HPC
you're going to have
standpoint.
way too much power than what you actually need as well, right?
Yeah, and Yeah, GPUs don't use near. HUD 8 when they were redesigning with the the custom NVIDIA GPUs, um, and they did have like a server set up, with the dual Xeons and lots of memory and a fiber channel back in with a full fiber optic connection. But when you start talking data centers, especially HPC data centers, something like Oak Ridge, something like like one of those that are very purpose built. Those are as fast as that compute is, and that by 8, PCIe 8.0 across 8x across all lanes, quad, Xenon Platinum, or the top end AMD processors. Those things are made like with the fiber channels that are put into the back of them are to 10 gig to 100 gig plus, right? Because everything needs to talk at a rate of speed from an input output standpoint. So this is part of the reason why render and all that kind of stuff took very small jobs, single SIT files. If you're trying to do 3D modeling at a singular level, it's not going to go render a Disney movie, right? So there's a lot going on there. So you could have some of the GPU farms that were kind of set up like this. I'll use Merkle, for example, that it had a pretty recent, deployment, large facility. Was one we visited, half a year ago. That was something that they could set up to do some limited compute. It was designed with, the basic servers that were put in there were enough to where you could do some like clustering, on the compute side. However, again, it's not at like a data center. It won't compete with like an Amazon type of price point. You're gonna have to go cheaper. And some of those data centers like Amazon and all that other stuff, they're gonna have fire suppression. They're gonna have all these other things that we would normally have in a crypto farm. The cooling is going to be a cooled environment, where these are going to be kind of in the warm environments, or in HUD 8 has them literally in containers, right? So from a security standpoint. So I don't know. I see it as kind of like maybe a split hedge of what it is. Stuff that maybe mining pools are doing, or if you're a large enough miner where the ordinals thing's very interesting. We were talking about that earlier. Because now if you're large enough Bitcoin miner, you could leverage that kind of off-chain posting of a block to where now it's not necessarily doing the on-chain competing for fees. You have a whole other side business now that is just capturing maybe somebody that really wants to get that picture in the next block type of thing. So you could generate a lot more revenue for the pool operators. One of the questions that we're going to be hopefully talking to Luxor here soon. I was trying to get something. We were actually trying to talk to him this today. One of the questions I have is like, okay, you guys are doing a lot of this stuff, but how are you guys keeping track of off-chain transactions? And how does the miner that's mining, that's creating the weight on your network for giving you enough hash rate, how are they able to validate what's being included now, that bonus of a block? Like you should see a bump in a yield, but now how do you work to make that transparent? I think that's the kind of next phase. I get it why it comes off a line in the beginning, because you're trying to get a person that's trying to work a deal. But how do you snap that line to see that if they paid you $30,000 in fees and you're given $18,000 in fees, which is significantly more than what normal blocks are, like, what's the delta there? What's your margin? Can you make that exposure to margin? You have a plan to make that exposure to margin, because then that's going to get into a whole other rabbit hole on all these different, Foundry starts doing it. If everybody else starts doing it because they see that, hey, it's a viable business model, then now we're not going to see, the transparency that Bitcoin's doing. And I see that's why some of the maxis get really fired up about it, of like, this is bad. This is a bad move. The incentives are not right. And I think the market ultimately dictates if people get the wind, this is the interesting thing about this community, about mining in general. If the miners feel that they're getting robbed, or that, wait a minute, like, am I getting all what you're doing? I get that you're going to take a margin, but if you're making more money, I'm just going to point my stuff to another chain. Or another pool, right? And very quickly, I don't want to say it's like cancel kind of thing, but like very quickly people could move off of the pool, right? So it's a balance that each of these pools are going to be beholden to make sure that they're not gaming the system
Yeah.
for their own immediate gain, because miners are actually giving them the weight of that pool. So I think it's naturally going to go into a good behavior, and there's a natural order to make sure that it's exposed. I think it's just one of those. Phase one is, does this work? Phase two is, okay, how can we make this transparent? You know what I mean? Like,
Right.
because the first person that does that too now sets the standard, because then everybody's going to be like, well, at least they're showing me what the hell's going on here. You know, and everybody should make money. And if you're a business and you're operating a function, you have to create revenue. That's the way you stay in business, right? So like I always tell people, never to apologize for taking a profit, for trying to better your business, expand your business.
Right.
If you're doing things like with a framework that allows you to do that, but like, you got, given the structure of the way Bitcoin mining works and the way the mining in general works, if you start gaming that system for your own personal gain, you're probably going to get wrecked in the end, because people are going to decide that, hey, that's not what we like.
Was it F2 pool that like had all those issues with their internal exchange, and it went from like top 3 to I think it's like number 4 now. Like, people say
Yep.
like these exchanges won't go, or not exchanges, but sometimes say like these pools are too powerful and they're not going to go anywhere. But I mean, in reality, like they do.
Overnight, it's a config change. Like we leverage Awesome Miner right now to manage our 1200 ASICs on there, and we have a good relationship with them for that. You know, we pay their fee and all that. You know, everybody's got to make money to, you know, provide services and stuff, but our ability to change a pool takes about 35 seconds across the entire 1200 ASICs. It's that quick. We literally have it scripted.
Yeah.
I can put in pool number, the next pool, apply to all ASICs, and right down the list it goes.
Yep.
And it's done. So that, you know, I think is,
well,
it's all about service, you know, like if they're, yeah, it's very powerful. And you know, that's where I think it kind of, if people are providing good services and they're enhancing your ability to generate a little more, I get that. I mean, and I think that's ordinals is an interesting development in Bitcoin. It's probably one of the most interesting developments in Bitcoin in a long time. And it shows the ingenuity of people coming and thinking of like how else to use something. Like something may have a certain intent. Taproot for sure had an intent, but it also now gave this whole new thing, right, that manifested from it. And I like development. I like seeing things move forward, right? So I'm interested in what could be. I do understand the arguments on the risk of the chain getting really bloated. I do understand the risk of all these other information things that could get in there, that then people are like, oh, you can't erase it. And what if you have all this bad information in there? Or, you know, like illegal information, like with, you know, if you're talking like some kind of like child porn or something terrible that shouldn't be there, like how do you handle those kind of situations? And you know, I always look at it like, you know, the regulatory fronts and all that, you got to understand how that stuff works, and understand that there is some gatekeeping that's just kind of like ethical, like of like you got to mint the block. Like the pool ultimately is creating that post, right? So it's like a natural filter kind of thing. It's like, well, I'm not trying to censor stuff, but come on, man. Like that's not, I think the world can agree that's pretty trash. And so there's a decorum, I think, that people naturally will fall into that. But like, you know, those kind of things is, I think, the way you answer that kind of stuff. But like, you know, it all comes back down. If a pool lets that through and you have somebody out there, or maybe somebody wins a block with enough hash rate, or they've rented it from Nice Hash or something, and they want a block and they want to be an idiot and put something in there, I think you kind of flag those as like, you know, well, somebody did it, you know, like you can not have it on the Explorer view or whatever else, but like, you know, the society needs to come around on those kind of things. But let the innovation happen.
Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.